Welcome back to another episode of the Utah Rental Property Insider. I'm Nate.
I'm Parker.
Yeah, today we're going to be talking about all things cost segregation. We've talked about cost segs before. I wanted to share kind of a real scenario that we've used or I've experienced with my properties I've invested in, and just talk through kind of a little strategy, game plan on what to do. Since it's year end, a lot of people would be buying properties if they've had a really big income year as part of their strategy to offset taxes, their tax liability. They'll be buying a property and making sure you get your report done before the end of the year. So we used Cost Seg Authority. There's several Cost Seg companies out there. There's several in Utah that are actually really great. The best one that I have used before Cost Seg Authority, they split. They're a company that, anyways, good people everywhere though. So
nice.
We're going to talk about how we can get basically $50,000 plus in tax write-offs every time you buy a rental property. Basically, in that same year you buy the property or run the cost seg study. So you can buy a rental property. You can even buy it 10 years ago, and you can still run a cost segregation study this year. So it doesn't limit you. And even if you've run a cost segregation study before, maybe you bought it 10 years ago, ran it 10 years ago, you can do another cost segregation study today if you have done upgrades to the property like new HVAC systems, new fencing, new appliances, whatever. If there's anything that is depreciable in the actual asset, you can do another study and capture that.
Mm-hmm. I guess who can qualify for that?
Yeah, anyone that has an investment property can qualify for this, and it's going to be a physical property. It can't be a primary residence, and it can't be land. So those are the criteria.
Even if the land is an investment?
Yeah, there's other ways. If there is any ancillary benefits, I would say it's more just keeping track of like your particular property's systems. So how old systems are, where they line up, and you can run this against, I'm sure AI could probably come up with an answer of like, this is how old all my appliances are. This is where my HVAC systems are. It can give you a component breakdown of like how long these things are likely to last, so you can help budget yourself for the future. So that's one way you can use it, but it's not typically something that people would do.
Nice. I guess a scenario just to get numbers out there. I mean, let's just use the nation average. If someone were to buy a $400,000 home, how much do you think they could save?
Yeah. Depending on the type of property, it would vary quite a bit. But let's say it's a single family property, so it's got no shared walls. It will likely be about 50%. This is a ballpark, so it could be less than that, could be more than that. So whatever you bought the property for, so you're going to be taking out land value. So say you bought the property a quarter acre. You say $400,000? $400,000. Let's say your land was probably on a quarter acre in Utah, was around $200,000, and this would probably be like 2 or 3 years ago. Now, land has gotten more expensive.
Land has gotten very expensive.
Yeah. So you're looking at about $200,000 home sitting on a piece of land, and you're going to be depreciating that particular element of it. And so it's not going to be the full $200,000 that you're going to be able to counteract your income with. It's usually going to be about 50% of that. So you're looking at maybe about $100,000 up to $100,000 or so.
Okay.
Yeah,
it's impressive.
Yeah, it's not bad.
Yeah.
How much can you actually save with all this? That's a rough scenario. I'll tell you kind of my first properties that I bought and what I was able to benefit from them. So first property I bought was a fourplex in 2016. So bought it on September 8th. I signed the documents in the hospital. I had my first child the 7th, and the title officer came to the hospital, and we literally signed documents for the fourplex in the hospital. And we moved into that property on January 1st of 2017.
Okay.
So we were basically cash even on that property. So when we were living there, so probably hard to do these days. We bought it. We know we paid 3.5% down. So what is that? We bought it for $385,000. I'm going to do the math really quick. Just so that
$16,000.
There it is. That's really good math. That's probably really
Probably.
close. Yeah. So 385 times 0.035.
13.
Okay. So 13,500 plus maybe 6,000 close. We're about 20,000, I want to say, for that investment. So we put $20,000 into it, ran a cost segregation study, and we were able to benefit, I believe, like $134,000 from
Nice.
that property.
Was that before the 20,000? Was that before or after? What happened? The furnace went out.
That was all the down payment.
That was all the down
So
payment.
something to always keep in mind when you're buying property is what needs to happen if you're buying deferred maintenance. So this property was built in the 1920s, refurbished, turned into a fourplex in 1970. The boiler was like 100 plus years old. It was a coal boiler and then turned into oil, like oil
Okay.
boiler. So that was like a short time, and then it got turned into a gas. So this thing, it's got asbestos wrapping on it, all that kind of
Nice.
stuff. Just don't touch it; it's fine. And yeah, anyway, so we just, instead of running this really inefficient boiler that was costing us maybe $800 to $900 a month in gas, which is insane to think about.
Yeah.
In the wintertime, that we just switched over into ductless mini splits. So the tenants were paying these, but that was going to help us in our cost segregation. So
And long term.
yeah, and long term,
Yeah.
yeah, just benefiting utilities. For us, we weren't having to pay those anymore. The tenants were going to be paying those, and so that cost maybe $15,000 or so. I did all the labor on it, other than the Freon charging the units, so saved probably about $15,000 there. So yeah, all in probably about $35,000 is what I put in, and then was able to get back out tax benefit wise, 100 and whatever it was, 34.
Yeah.
So then the next few years, I tried to buy property early on in these, especially when I could see that things were going to be appreciating fast. I bought a property every year. So the next property I bought was the following year. It was a single family home. I wouldn't recommend doing what we did, but we were a young family. We bought like a house that was bigger than what we needed at the time. So we lived in the basement apartment, and we had renters living in the upstairs unit. So house hack, but
Yeah.
it was
It's the way to do it.
questionable.
Yeah. But it worked.
But it worked. Yeah. And then the next properties that we got were, I went in on one with my brother, and then I went on another property with my dad. They were both multifamily units.
Nice.
And ran cost segs on those.
Yeah.
But total all in all the cost segs, so couldn't do my primary residence, but I was able to do some write-offs as like running a business from my home, which is great. But total write-offs are probably in the $350,000 range.
Nice.
So yeah, not
there
too
you go.
shabby.
And if anybody has more questions on cost segregations, what do you recommend them to do for their first steps?
Yeah, first steps. I mean, you're welcome, if you're just trying to get basic feedback, you're welcome to call us. We're happy to chat. Or even just like looking at an analysis for a property that you're looking to buy or whatever, we can talk through that. But if you're looking for preliminary reports and stuff like that for your property that you have, maybe, I would reach out to Cost Seg Authority. They can give you, within like 24 to 48 hours, they can give you a basic idea of what you could expect from a report at that property. So they're usually fairly accurate, to be honest. So they're gonna be conservative in their guess. So say they come in at like, you can depreciate $80,000 at this property. It's likely going to be closer to 100,000. So yeah,
Nice.
they're good that way. So,
Right on. Well, there you have it.
Yeah.
That's been Utah Rental Property Insider.
Yeah, we'll catch you next time.
Hopefully enjoy the new year.
Yep. See ya.
Bye.